Simplicity is never a matter of circumstances. Simplicity is a matter of focus. And Voskamp. Focus, my friends. That is what we do here every day. What do you hear me repeat? What is the mantra? We trend follow. We watch price. We don't get confused by the news. We focus on what is important, the only thing that's important. Which way is price going? Have a special training for our subscribers. You can subscribe for free at chartingwealth.com. Fundamental analysis is fine, but don't be a dumb buyer. Please, my friends, watch that over the weekend. Study it. Pay attention to it. Fundamental analysis is great. It's great to know that you're investing in good companies, companies with good prospects, own and own and own. But you know what really matters is buying at the right price. Why would you want to buy anything and pay more than you would have to and buy at the wrong time? You always want to buy at the right price. You don't want to catch a falling knife. You don't want to pay the wrong price. You don't want to sell at the wrong time. Think of the people who got out of gold just before it turned around and reached these highs that it has reached lately. Now, let's go to the charts. 10 to 15 minutes a day, that's all we ask. We only see one chart up out of our big four, and that is just barely the S&P 500. Been a good week. Things slowing down at the end of the week. Check out the S&P 500 chart. Look at that big candle. We do have a big candle for the week. We can see that we reached a higher high. The candle body is bigger. It's the biggest one we've seen in quite a while, well above the weekly trend line. Price percent oscillator ticking up. Look at that derivative oscillator, gained quite a bit of momentum. That's from all the increasing price. We look at the 2-day chart. And remember, this candle finished forming on Friday afternoon. Now, we had a 2-day recross, did we not? That jumping in point somewhere around the 326.50 mark. How high have we gone? Up to a high of now let me make sure I said that right, 326.50, somewhere up to a high of 334.88. Not bad. Not bad in 4 days, is it? And we see the derivative oscillator gaining momentum, price percent oscillator pulling away from the red signal line. Remember, these 2-day recrosses aren't my favorite, but in order to use them, you need to backtrack on your charts and make sure they're accurate 90% or so of the time if you want to use them with some type of assurance. Now, things in the market are always subject to change. We talk about that probably more than anybody else. Stuff you do right now might not work 5 years from now, 5 months from now. That's why we are constantly in the market every day charting, seeing what works and doing it. Let's look at what we see for the 4 or the half-day chart. I'm so used to calling it the 4-hour. It's never been 4 hours. It's been 195 minutes. And of course, we've converted to that language on our TC 2000 chart. What do we see? We see some up movement in the morning, about the same in the afternoon again. These are Heikin Ashi candlesticks. They show average pace. I'll, in fact, for everybody who's not taken the Heikin Ashi training, I'll put at the end of today's video, along with a video on the book. If you don't have that, it'll tell you all about charting your way to wealth and why you need it to understand what we do here, critical for your knowledge. And again, we see prices well above the weekly, the 2-day, and the 4-hour. That's nice to see. Now, we did end the day with a green spinning top, open box, but it does mean some indecision. So again, slowing down a little bit in the up movement. Go back to the weekly chart. S&P still looking okay. Let's go to where we see some real slowing, though, down 1.15% on the Qs. Now we see, as far as the weekly goes, we did reach a higher high throughout the week. Over the entire week, we see that the price percent oscillator is still moving up. Derivative oscillator losing some momentum. Prices above the weekly trend line. Go to the 2-day. What do we see there? Well, the 2-day was trying to cross over, wasn't it? We cautioned you not to jump in until and unless it did, and it might do that on Friday. Well, it didn't, did it? So that means you should not have pulled the trigger on that and gotten in. We'll just see what's up. So we had a slowdown. We see the derivative oscillator is still negative. Price percent oscillator still negative. That's on the 2-day. We go now to the half-day. Some up movement in the morning, but bam, lost that energy, fell through the 4-hour trend line that we'll redraw to try to follow some of that movement a little better. Oh, it's hard doing it. See, can't really draw one very well. We like to connect at least 3 candles. Heck, I guess we could go maybe down. Nope, maybe down to here. That isn't great, but well, that's all right. But what do we see? We see a red hammer. We see things falling out of the trend line, and we see a solid red down move in the afternoon. Price percent oscillator canting over, derivative oscillator losing momentum. Don't get super upset. That is our smallest chart, but we'll pay attention to it. The 2-day, not enough energy to cross over. Weekly still moving up with some healthy vigor, so we'll watch and see what happens. Maybe we'll have that 2-day crossover, what we call a 2-day recross, going up. Might give you a jumping in point by Tuesday. Remember, Monday's not good because it's the first day of the 2-day candle. You could have jumped in yesterday on the first day of this 2-day candle and you would have lost out because you would have lost immediately 1.15% for today. That is Friday. So again, that's why we do what we do, because it tends to work most of the time. 12 out of 13 times our weekly vertical crossovers have served us well this year. Let's move into TLT 20-year bonds. What do we see? Down 0.67%. Looking to see if there's going to be a weekly vertical crossover. Failed. Did not happen. Didn't happen. The weekly vertical crossover didn't fail us. I just mean that the price percent oscillator didn't cross over. We ended the week with a red open box top. We had 6 weeks of prior up movement, but look what happened. Things slowed big time. And we just don't have enough energy for the 20-year bonds to cross over to give us a jumping in point. Just don't have it yet. Let's go to the 2-day. What do we see there? We see it topping out, sliding sideways, and we see the price percent oscillator again heading sideways, down a little bit. Derivative oscillator peaked all the way back when that sideways slide started on the 30th of July. We go from the 2-day to the 4-hour, or the half-day rather, 195 minutes. And of course, you saw things happen back on August the 3rd in the morning, where we had the crossover on the half-day chart, and it's gone around and down, but ended pushing through the 2-day trend line. So didn't have the crossover going up. We'll see. We'll wait. We'll be patient. And again, you say, wait a minute, Tom, this has been going up for 6 weeks. Why didn't we get in? Because we rely on something that gives us good, sound information. And we don't have to be greedy and try to jump in on things that aren't giving us what we want. Yes, things can go up, things can go down, and it isn't necessarily always reflected in our indicators. But when they are reflected in our indicators, they almost always go in the direction that the indicators indicate. So what do? Do we just do what we want to do? No, we have learned through trial and error to follow the indicators. And again, there's tons of stocks, tons of ETFs out there that you can learn to chart and track. And if you rely on the indicators and they work on those charts, they don't work on all charts. There's some things that don't move enough, that move sporadically, that move for crazy reasons, that just aren't worth charting. We have learned to rely on our indicators because they rarely lead us astray. That's why we do what we do consistently, and we have that 90% plus track record of accurate weekly vertical crossovers. Now, the real key, somebody asked me, couldn't a computer do this? Couldn't you just have an algorithm? The weekly vertical crossovers, they're pretty easy to get into, but it's getting out where you build that skill set. That's why you need to be with us every day to learn those skills. Now, lastly, we go to gold, down 1.59% after a fantastic week of up movement. We see things slow down on Friday. Gold continuing to track up strongly on the price percent oscillator on the weekly chart and the derivative oscillator. Look at that big green up candle above the Bollinger Bands, which are volatility bands, stretching them out even further and even higher on the wick. We go to the 2-day. You can see where it is up. Again, slowed down some. The price percent oscillator slowed down in its track up. Derivative oscillator went flat. Go to the half-day chart. That's where you see down in the morning. Further down in the afternoon, blowing through in the morning, the 4-hour trend line, which was a steep one, blowing off some energy. But pay attention. That 2-day is still strong and the weekly is. So we'll hope to see some more up movement over the course of this next week. And we'll just see where gold goes. Now again, you can take your profits at any point. You could have pulled your profits the minute the market opened, blowing through the 4-hour trend line. How do you make your decision on when is the right time? It's based on how much you know about the specific ETF or stock you are involved with. How much do you know about it? How long have you tracked it and traded it? What is the typical move percentage-wise? The mean, median, mode. What do you know about how accurate your trend line breaks are when price moves through the different trend lines? How much attention do you pay to the price percent oscillator on the 4-hour chart, the 2-day chart, and the weekly? What about the derivative oscillator? What role does it play? All of those are questions that you only learn the answers to by practicing and using your trade worksheets, your daily market worksheets and your weekly market worksheets. Where do you get those? They're for free in your show notes every day, and they're great trainings on them. In fact, I'm going to put back in today's video at the end how to use the weekly market worksheet and the trade worksheet just for you. So I'm going to have there at the end that information along with the other training that I promised for you. So be sure to check out the training at the end. Those will be attached as videos. Folks, that's where we are. We have covered our 4 big charts. If that's all you care about, you're done. Have a great weekend. Be sure to fill out those trade worksheets, particularly the trade worksheet when you're in a trade and the weekly market worksheet. At least you fill that out while you're listening to the program I just gave you. We talk about that quite often. Now, if you're done, goodbye. Otherwise, we're going to jump into Bitcoin, jump in real estate, jump into oil. Bitcoin down for the day, 1.81%. Let's start with the weekly. Nice weekly candle. Look at that hockey stick moving up. Price percent oscillator moving up. Derivative oscillator. Nice big candle. Go to the 2-day. Again, a nice 2-day candle with a nice wick on top. Nice size. Price percent oscillator. Derivative oscillator losing a little bit of that angle that it had been going up, but still very strong. What do we see on the half day? We see some sliding sideways in the morning and down in the afternoon, crossing over on that price percent oscillator, derivative oscillator, gaining downward momentum on the half-day chart. So again, if you're in that Bitcoin practice trade, when it crossed over on that 2-day recross, you're still looking fine. Just again, pay close attention. Watch for further weakening on the 2-day. Hope you're drawing your trend lines and all the stuff we teach on our Big 4. It's what it's all about. And do practice, learn, keep up with what you're doing. That's where we are on Bitcoin. We're going to leave Bitcoin, go to real estate, up 1.43% for the day. Price percent oscillator heading up. Derivative oscillator gained some momentum. We see a green up candle. We go to the 2-day chart. What do we see there? We see, as far as the Thursday and Friday movement, hitting a higher high, moving up as to what it's done here lately. We see the price percent oscillator angling up higher, derivative oscillator gaining momentum. Of course, we had that 2-day recross, jumping in point somewhere around $81.30 or so. How high has it gotten? $82.43 in 6 days. Again, it's real estate. I would be very trepidatious jumping into a lot of real estate now, but Our 2-day recross, again, it's worked so far. What do we see going on the half-day chart? You see up movement in the morning, further up in the afternoon. That's nice to see. Crossover in the morning. So real estate's looking okay. Let's go to oil, down 1.08% for the day. Now that price percent oscillator on the weekly chart continuing to move away from the red signal line. Derivative oscillator losing momentum. We see a nice high wick. The candle itself not so big as far as the wick goes. It's about 1.5, maybe two, about 1.5 times, I guess, the size of the candle itself. We go to the 2-day chart. We see it a little greater than flat. That as far as the price percent oscillator goes, derivative oscillator moving up. Latest 2-day candle didn't reach the high that we saw earlier in the week. We go to the half-day chart down in the morning, a little further down in the afternoon, like we said, down 1.09%. So again, pay close attention to that 2-day chart, which isn't super strong. It's pretty flat. So pay close attention to that if you're practicing real oil right now. And again, just watch it. So we'll continue to monitor those things. Just for our silver nuts, silver down a little bit for the day, 2.57%, but a great week overall on silver. Price percent oscillator spiking up, derivative oscillator moving up on the weekly 2-day. Nice big candle up, derivative oscillator strong, price percent oscillator weakening a little bit. And what is silver doing? Topping right now, sliding sideways. Dojis, red dojis in the morning and afternoon. Means lots of indecision, tending down. Price percent oscillator flat, maybe down a little bit. Derivative oscillator losing momentum. So again, pay close attention to the 2-day, which is strong, and the weekly. See what silver does as it moves back. Of course, we had a beautiful jumping in point on silver. When was that? Back on, is that the 10th? We had the 2-day recross going up somewhere around the 1750 mark to a high of 2690 in just that short a period of time, about a month. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Order the book, Charting Your Way to Wealth, to know what you are doing. Supercharge your training. God bless.